the chances are very high, in the 90% or above, that we'll have a liquidity crisis. In other words, when the credit markets freeze, and then they just dump everything, and that includes gold. It's just a huge surge or a lurch towards U.S. dollars. Everybody wants them. Everybody needs them. So in that case, gold will sell off. Not to give you a sermon here, but to go back to economics, if the Fed were ever to allow this grand reconciliation of asset prices to occur, what a wonderful system we would have on the other side of it. We'd actually tie the monetary base to gold. So the mine supply of gold would equal the increase in the monetary base. And this is all fantasy, by the way. I'm hoping you asked me to fantasize. But I'm going to fantasize about a Federal Reserve that goes back to tying the dollar to specie. We have a very limited monetary base. Asset bubbles are no longer in existence. We don't resort towards universal basic income. We no longer monetize massive trillions of dollars of treasury debt. And we have a stable dollar, stable rate of inflation, low taxes, low interest rates. That is something that would be a product of going back to a gold standard. Something that I hate to say something nice about Russia, because there's nothing nice about what they're doing right now. But they are sort of returning that ruble to a currency that's backed by gold. And I think China might be going that way too. And this is going off of the U.S. dollar standard of trade. Dollar hegemony has caused a backlash because people don't want to be sanctioned anymore. Countries can no longer stand for that. So maybe we have a chance, just maybe, if we elect presidents that appoint Federal Reserve chairs that answer this question accurately and correctly. Do you believe that money should mean something? That the purchasing power of a dollar should be guaranteed by something other than a printing press? And that seems to me something that my 10-year-old daughter could answer correctly. But that would be a prerequisite to get a nomination through to become chairman of the Federal Reserve. So I did reach the maximum allocation to precious metals about a month or so ago. I'm now at 18 to 20%, which is my max exposure to the metals and mining sector. It had been working out very well for us outside of today. So I think bear market rallies or counter trend moves are very violent. So you're seeing a big up move in the markets today, sell off in gold and the miners. I still think we're in a big, long bull market. And I think it's just getting started. It will be, here's the caveat, it will be truncated for a very short period of time when and if we reach that liquidity crisis. At some point, maybe in the fall, is my best guess, whenever the Fed decides to really get going with their $1 trillion per annum of monetary destruction, draining the balance sheet, also known as quantitative tightening. When that gets going in earnest, in conjunction with rate hikes, as that slams into a very weak economy, the chances are very high, in the 90% or above, that we'll have a liquidity crisis. In other words, when the credit markets freeze, and then they just dump everything, and that includes gold. It's just a huge surge or a lurch towards U.S. dollars. Everybody wants them. Everybody needs them. So in that case, gold will sell off. But that'll only usher in the second leg. Let's call it the second leg of a multi-year bull market in precious metals, in my opinion, as the Fed ushers in that long period of stagflation like we've never seen. I mean, you want to be diversified. If you're not in an actively managed strategy, the second best place is a diversified portfolio, which would include cash and precious metals in it. Don't just buy, stocks, because, people often misrepresent how good stocks are as a hedge against inflation. So from the nadir of inflation in 1972, which is about 2.75, all the way through 1980, which was the peak of inflation, around 15%. Stocks lost 7% of their value in nominal terms. So it all depends on how strong inflation becomes. And I can make a cogent argument that after this next collapse comes and Jerome Powell is forced to rescue and reliquefy the banking system, even though inflation is still way above 2%, which is their target, you could have a very long and protracted period of stagflation, just like we had in the 70s, but much worse, with soaring yields. And that's a horrible place to, park your money, would be equities in that environment. Well, I mean, cash I've always thought of as a viable asset class. So, stocks, bonds, commodities, currencies, cash is a wonderful thing to hold, because, here's the calculation. If the market's going to go down, regardless of the rate of inflation, let's just say inflation is running at 10% per annum, we have a choice. You have your investments, your investment bucket. You could either keep a high level of cash and then just subtract that rate of inflation from it, or you could suffer a steep loss in the principal and then subtract inflation from it. What do you think would be the smarter thing to do? Well, obviously, it would be to preserve your principal as best you can in nominal terms. So holding cash is a very good option, sometimes no matter how high inflation is, because your other alternatives just don't work. Well, it's all about control. And unfortunately, we have powers that be that just think that they can control markets and that people shouldn't have the final say. So that's when you end up with saying things like, we can never have a recession. We can never have a bear market. We need to adopt things like universal basic income and a central bank digital currency, because we, being that small elite group of people on the FOMC, or you pick the central bank heads of the world, the governments of the world and central bankers of the world are usurping your individual freedom, liberty, and decision-making powers, taking it from you. You serve a very real purpose here. I mean, these types of channels, these forums, are essential for people to at least think, why have I relinquished my right to have my dollars that I earned lose their purchasing power? Look at the monetary base, by the way. It has doubled. There's been a doubling of the monetary base in the last 2 years. So why have I allowed, who voted for that? Who allowed that to happen? Who sanctioned that? Who assented to have that power ceded from them? So, this is why I come on these programs, because I want people to question and not let it happen any longer. We can survive as a country and as a people, allowing the market, what is the market, by the way? It's millions of people having the right, the ability to decide what they want to buy and at what price. Everybody has that power to make millions and millions of decisions every day to decide what they want to buy, consume, build, and the cost of anything, the cost of money in the vanguard. So, let's hope. You want to have hope? Let's hope enough people listen to Dunning & Kaiser and Liberty and Finance, and we can maybe change the world one day. That's hope.